predicted the Brisbane market, I have to say. I looked at really some of the statistics around non-performance of growth, and really a lot of my clients, I would say every single one of them, owns real estate in Brisbane, which has accelerated in value. Welcome to the Urban Property Investor. I'm your host, Sam Saggers, here to help you crack the code of real estate wealth. We're going to dig into it. Yep, this one's by popular demand. Where is the Brisbane market at? We're going to dig into trends, growth, a little bit of a forecast, and of course, we'll touch on that fundamental of real estate investment pie. But hey, welcome back, regulars. Play the show in double speed. Get your life back. All the episodes I've done, except for the one on the election, are actually lessons on real estate. So maybe just avoid the election one and go back in time and find a lesson on real estate. But hey, the Brisbane market, let's crack into it. What's it up to? Where are the latest stats? Well, I think we can break the Brisbane market into some current market indicators. And of course, we can look at some trends and some framework happening inside of that economy. Really is a bit of a sweetheart when it comes to the property market at the moment. And really the belief behind Brisbane is, as I've alluded to, quite time bound with the 2032 Olympic Games still yet to be delivered. Of course, that in itself is going to open the eyes of the world to Brisbane. But if we look at dwelling values and where the market's at the moment, it's certainly an interesting set of statistics, depending where you pull your data from. And today I'm using REA as a source, as well as the ABS and CoreLogic. The property values in Brisbane are well and truly up there. We can see houses with an average price point of $977,000. And units, well, they're nudging a median of $700,000, which is off the back of a year-on-year growth rate of over 15%. There really are not enough apartments circulating around in Brisbane. There's not a lot being produced, and that is having a real effect on the apartment market inside of Brisbane. Now, remember, a lot of the apartment market in and around Brisbane was produced around its river suburbs, which of course are some of the best suburbs in Brisbane. Brisbane is a river city. Sydney is a harbour city. Both have two things in common. A lot of the best suburbs are around both waterways. And of recent times, we've just seen an uplift of growth around those suburbs. And of course, the unit market's been the beneficiary because there is a large typology of apartments in those areas. But wow, what a level of growth. Now, a couple of years ago, I said Brisbane will have what is known as a double cycle. Yes, Brisbane had not grown for many, many moons. And it's probably fair to say from about 2009 to 2019, Brisbane really had 10 years of lackluster growth. And of course, if you bought in 2015, you were waiting 4 or 5 years for the first signals of growth. If you bought in 2010, you probably opted out of the Brisbane market in 2018, 2 years before things took off. And of course, for many people who've held firm, real estate is a game of holding assets to get the maximum amount of growth. They've done really, really well. And of course, if you bought really at the start of COVID, you got the best of real estate growth over the last couple of years. But certainly I I predicted the Brisbane market, I have to say. I looked at really some of the statistics around non-performance of growth, and really a lot of my clients, I would say every single one of them, owns real estate in Brisbane, which has accelerated in value, all because of a concept known as future mean reversion. We could see statistically that Brisbane was overdue for capital growth. And if I was doing this presentation in 2018, the average price for a house was about $480,000. Now, median, not average, is $977,000. So an incredible amount of growth over the last 5 years. And this year is suggested to continue that trend. More growth. A lot of the predictors still have growth on the cards, really all the way through to the next era of 2030. Now, if I look at some just rolling annual figures right now today, we can see that lending is still showing uptick of people wanting to borrow money in Southeast Queensland, which is very interesting because obviously over the last really 2 quarters, we've had a pretty high cash rate, and lending is still going up. So lending is a really good lead indicator of where people are buying. And we can see that Queensland still very, very popular when it comes to the what next for Australian property. What is a very interesting statistic for Brisbane is the amount of listings on market. It is very, very light compared to its 15-year average. It's very low. There's not a lot of stock on market, and probably a large reason to that is people from Queensland don't often migrate out of Queensland these days. There is a lot of people retaining themselves. Young people aren't moving to Sydney like they used to. So you're not getting really people put their properties on the market and leave the state. You're actually seeing the opposite. People are hunkering down, and because there's low levels of stock being sold and not a lot of stock being produced, really listings data is very low because you don't really sell a property if you can't go and buy another one. So there's a real challenge there, certainly, when it comes to what that will do to price growth. So if you think you're priced out of Brisbane now, wow, potentially up to the games, it could get very, very interesting. Could Brisbane become Australia's most expensive real estate market? Well, real estate is generally driven off beliefs and data. And certainly from a belief perspective, it's a very, very popular marketplace. And as I say, beliefs usually are not time-bound, but Brisbane has the benefit of a time-bound situation off the back of the 2032 Olympic Games. So when it comes to the Olympic Games, it is an interesting conversation dynamic. Brisbane 32. Now, I've been tracking this Olympic thing for a long time. I first got wind of Brisbane's Olympic bid, the idea to create an Olympic city inside of Brisbane circa 2015. It was being talked about through the powers that be, and I guess my circle up in Brisbane. So, wow, it's been won, but not a lot has happened. Let's face it. There hasn't been a lot of infrastructure being produced off the back of it. But let's just talk about a couple of the conversations around the Olympic City. Let's go back to Sydney 2000. In 2000, and I went to the Olympics. I participated as a fan. Sydney was a pretty recognized city back then. Sydney has always been a global city. It's well known. It didn't need to be put on the map through the Olympic Games. It was a bonus for Sydney, but it wasn't the reveal of Sydney. And it was a great games. It was a great games. It had it all. And I can say, after going to an Olympic Games and buying many a ticket, when Brisbane comes around, grab yourself some tickets and become a fan. Spend 2 weeks in Brisbane. It is a absolute festival occasion, Olympics. But if we go to 2004, Athens, again, a global city, the home of the Olympics. 2008, Beijing, mega city inside of our planet. Everyone knows Beijing, capital of China, didn't need to be put on the map. Then 2012, London. Again, everyone knows London. 2016, Rio de Janeiro. It's a famous city in the world. Didn't need to be put on the map. 2020, Tokyo. Famous city, one of the best cities in the world. If you ever get a chance to go there, absolutely incredible. I've been to all these cities, by the way, which are on the map. So I can tell you I got robbed in Rio de Janeiro. Yes. If you want to get robbed at the giant Jesus, then go to Rio de Janeiro and go see Jesus. On the way down, you will get mugged, but what a city. What a great city. Tokyo, great city in 2020. Obviously, that games was a COVID game, so a little bit off the radar for everyone. But then, of course, we had the woke games in Paris. Offended everyone, offended the Christian community. So maybe, I don't know, the robbers of Jesus in Brazil can head over to rob everyone else in France. I don't know. But 2028, we are going to have the Los Angeles Olympics, which again is another well-known city. And then we get to Brisbane, Brisbane 32. No one has ever heard of Brisbane outside of really Oceania. People don't know Brisbane. They don't know how to say Brisbane. They say Brisbane. They don't know much about this city. And I think if you look at really Sydney, Athens, Beijing, London, Rio, Tokyo, Paris, LA, they don't have a need to build brand around their city. But Brisbane has a massive opportunity for economic growth off the back of the games. Paris doesn't need more economic growth because it held the Olympics. LA doesn't need to reinvent itself because it is going to hold the Olympics. London, the financial capital of the world. But Brisbane is unique because Brisbane will be put on the map. And that will induce tourism to Australia and, of course, Southeast Queensland. It will induce trade. There will be more trade into Australia and, of course, Southeast Queensland. Trade that may not exist right now. Partnerships will be done. Business ideas will be created. An inducement of activity will unfold. And, of course, obviously, off the back of the games, you will get localized civil pride. People will go, Brisbane is a great place because civil pride will unfold. And civil pride happened during the 2000 Olympics. We invented a place called Homebush here in Sydney, which didn't really exist. We created stadiums. There was a lot of pride around the renovation of Sydney back then. And you will experience this in Brisbane. And I say this because Brisbane's going through a double cycle, which is a bit of a unique thing for real estate. Typically, a cycle will run its thing, a growth spurt will happen. But as I alluded to, Brisbane has not actually had any of its renovation yet unfolded. It has had zero civil pride. Yet it has some amazing trajectory when it comes to really its future to 2032. And I think that will have a stabilizing and even a growing effect on the real estate scene. Now, often after a growth spurt, you actually go into a period where prices fall away sharply, and you can undo a lot of growth with really a sharp price correction. There will still be growth, but quite often that is counterbalanced through the mechanisms of just coming off the boil. When a market comes off the boil, it starts to flatline or go down in value. Sure, it can go down 10%, but if it's gone up 100%, that means you're still up 90%. But Brisbane seems to be holding pretty steady off the back of its most recent growth spurt. And really, if we track the trajectory of that, during the pandemic, that growth wave was really resilient Southeast Queensland. It dealt with COVID very, very well. People decided, hey, I'm not going to spend a year in lockdown in Sydney and Melbourne. I'm going to go see what Southeast Queensland's all about. My company's got an office up there. My company does work up there. I'm just going to get out of here and see what happens. And of course, a lot of those people stuck and stayed in Southeast Queensland. So during that pandemic period, there was a lot of capital growth. And of course, we saw a lot of induced demand into housing through things like Home Builder, which again soaked up a lot of the product in Southeast Queensland and pushed a lot of capital growth. So we saw population growth. Again, if we track the trajectory of the Olympic Games, we've kind of already done the resilience of the pandemic, the population growth spurt. We've repopulated Southeast Queensland. But really, what next is quite fascinating. What next for Brisbane is a CBD reimagined, a new Olympic stadium, literally walkable to the CBD, new Olympic infrastructure through rail upgrades, through civil upgrades, through just renovating the city. You're going to have an effect where business all of a sudden changes the dynamic of the jobs market in Southeast Queensland. The need for extra construction workers to build these big civil pride projects is going to be a real call to arms for Brisbane. There will be a shortage of construction workers in Southeast Queensland. And I think you're going to see a lot of people have to migrate to fill the roles of jobs needed to build this Olympic infrastructure. And of course, the startup nature of businesses that can come together inside of an Olympic city is pretty exciting for Brisbane. I mean, you've got the ability for Brisbane to innovate, their companies to innovate, their companies to lean into the future tourism potential, the talent potential of bringing talented people into the workforce. And all of that bodes very, very well for Queensland. It bodes very, very well for Brisbane's aggregate trajectory. If you're bringing talented people here to deliver the games, that's certainly skill which can go long past the actual games or the 2-week games itself. If you're bringing world-class infrastructure like a new stadium, that lingers around well after the games itself. And of course, when cities win the Olympics, and we saw this in Sydney, there is a level of let's get the bus network working, let's clean up the potholes, let's remove the graffiti. Back in Sydney, and it was a big controversial point back then, there was, the police were asked to move all the homeless people out of the city and house them and get them, off the streets. for those games. There was this kind of like, let's really clean up this city. And some of it was flaky and fake, but a lot of it, that infrastructure is still here today. We still use in Sydney Olympic infrastructure to this very day. If you go to the state of origin, you're using Olympic infrastructure. If you go to a concert, you're using Olympic infrastructure. And Brisbane's aggregate trajectory around its infrastructure is, obviously, there is some government announcements, but then there's the private sector that goes, okay, well, we can now see the vision for Brisbane. Let's fund Brisbane Live in Woolloongabba. Let's spend money on our own arena. Let's inject capital into the marketplace because we know there's a guaranteed return at the other side of things. So again, this is going to obviously be very beneficial for Queensland, very beneficial for Southeast Queensland, Brisbane, the Gold Coast, the Sunshine Coast, Toowoomba, and of course, really the total population over really the next decade up until the games is going to increase by circa 500,000 people. So that's, that's 30, 40, 50,000 people coming into Brisbane's population every year. And of course, that means Brisbane needs to produce a lot of real estate to keep up with that. I recently caught up with Paul Rieger from Urbis. Urbis are a massive planning infrastructure advisory firm, one of the biggest in Australia. And really, Paul's message was, you got to build more of everything, more house and land packages, renovate established homes, more apartments, more everything, more build to rent, more build to sell, you name it. Brisbane is just really behind when it comes to its stock production versus really this draw card of the Olympic Games. There's going to be a lot of work as a spin-off effect to create these games, whether it's creating a little mascot. I don't know what the mascot's going to be. It could be a little, maybe it exists already. I don't know, a little dingo or something. Whether it's marketing companies, logistic companies, security companies, AI companies, data storage companies, they're all going to be the beneficiary of what next for Brisbane. But certainly Brisbane puts a brain drain on New South Wales. Yes, people leave Sydney to go live in the greener patches of Queensland. And interesting when we analyse, Queensland's population growth from net migration, 75% of net migration comes from New South Wales. People move from New South Wales to Queensland. And really, during COVID, there was an acceleration of Victorians moving to Queensland. But really, traditionally, it's New South Wales people moving up. They really do make up the large amount of market share of people leaving Sydney, which is a very expensive city, and going and getting price arbitrage in Brisbane. Now, Brisbane's had growth. So does the price arbitrage still work? Can you leave Sydney and move to Brisbane for a relatively less expensive life? That is a big question, and we'll analyse that question. But interesting, Queensland's population growth from a net overseas migration perspective is also very strong. So Queensland's universities are attracting students, but equally there is skilled migrants coming into the economy. Now, we know Queensland's a draw card for internationals and interstate migrants. What is interesting inside of Queensland, which may slow down its migration rate, is the economic spread or pricing power arbitrage. Now, again, sometimes I explain this using a Big Mac. If a Big Mac in Sydney is a Big Mac, that's the Big Mac. We're going to index everything off. How many Big Macs can you get in Brisbane? Well, effectively, can you still get 2 Big Macs, 2 properties for 1 Sydney property? That has typically driven a lot of interstate migration. And when price spreads of 50% Sydney to Brisbane, you typically see strong migration. When prices actually fall away and you get a spread of, say, 20% price gap, you don't get a lot of interstate migration to Brisbane. In other words, people move to Brisbane from Sydney for price and lifestyle. And really, 50% is kind of the benchmark where you see a lot of, just continuous movement. And interesting enough, during COVID, Brisbane boomed. It boomed a lot. Sydney also grew in value. It didn't boom as much, but it did have price increases. And Sydney, because of its price points, didn't need as much growth as Brisbane to get the same dollar outcome. In other words, a Brisbane property that was $500,000 needed effectively 20% growth to become $600,000. A Sydney property creating $100,000 gain. Sydney property that was $1 million only needed 10% growth to create $100,000 gain. So what happened at the end of COVID was both marketplaces gained. And the differential is still quite interesting. You have effectively, again, and this is data using Real Estate Institute data, CoreLogic data. This is a spread of data. But you've got a Sydney median price spread from Brisbane to Sydney of Brisbane median house of 916 and Sydney 1.65. So you can see a $785,000 gap. That gap is well and truly enough for people to want to migrate and find an affordable property in Southeast Queensland. So the gap still remains, which is quite interesting because typically late in the cycle, smaller markets grow. Early in the cycle, bigger markets grow. And we saw that in the 2010s, 2015, Sydney and Melbourne were doing way better than Brisbane, Perth, and Adelaide. And we've seen basically later in the cycle, Brisbane, Melbourne, and Adelaide do very well. I think the cycle will then throw back to Brisbane and Sydney doing well. But again, Brisbane sits in this magical place of a double cycle theory. In other words, really off the back of the games, the Brisbane market is going to continue to do very, very well. And we can see from a migration point of view, Brisbane actually is going to do perfectly fine off the back of mainly New South Welsh people moving to Queensland. However, if we analyse Melbourne typically people migrate from Melbourne when Melbourne property values are 30% higher than Brisbane. The two markets are really at parity. One Big Mac in Brisbane gets you one Big Mac in Melbourne. So one could argue there will be less interstate migration from Victorians who really don't see a level of affordability when they cast their eye out onto Brisbane. People who see affordability are New South Welsh people when they look at Queensland. And of course, that's interesting, but it's kind of because most migrants come from New South Wales into Queensland, you really are seeing that stability. You'll see it continue to grow, which is amazing. And of course, if we look at the rental market, can Brisbane rents keep on improving? Well, again, stock on market, available properties to rent is very, very, very low, very low. Less than 2,000 basically last quarter for rent. And if you go back to, say, a quarter during 2016, you're talking about 12,500 properties on the market. So metropolitan vacancy rates of less than 1%. So again, why there's no stock on market, even if you wanted to sell your property and rent one, it's pretty bloody difficult. It's pretty bloody difficult. And inner city, middle suburbs, outer suburbs, all less than 1%. Gold Coast, Sunshine Coast, or really less than 1.1%. So it doesn't get any better anywhere you go. There is really a real challenge of basically vacant of nothing to rent, which is amazing. And I run a business in New Zealand, and poor old New Zealand. There's a lot of people depopulating from New Zealand. A lot of people moving to Australia as permanent residents of Australia. New Zealanders are automatically permanent residents of Australia. The large population brain drain leaving. And to rent a property in New Zealand today takes a lot of time. It takes a lot of effort. It's stressful for the landlord. It's stressful for the property manager. It is what it is. Australia's been through this stuff as well, but it's all very short term. It all sorts itself out in the end. But the reason I highlight that is just these numbers are off the chart. We kind of maybe don't appreciate contextually just how amazing these numbers are, like less than 1% in outer Brisbane, middle Brisbane, inner Brisbane, greater Brisbane. Truly amazing. And if we look at some of the growth figures in rent, it's certainly keeping up with inflation, which is obviously one of the reasons why we become property investors. It's that inflation hedge, which is amazing. But certainly projects, when you think about Brisbane, and I just went up to Kelvin Grove and stood on the land where the Olympic Stadium will be. Truly is very, very interesting. It's going to be in a remarkable stadium, kind of elevated into basically the one of the highest points of Brisbane. Brisbane's quite a hilly kind of city at times, and you really are going up the hill to the top of the hill to then go into the stadium. I think that will, I would imagine, if they do a little bit more work on the look and feel of this new stadium, I think it's going to be quite elevated. It's going to be like a Coliseum on the hill of Brisbane. So I think it will truly be a very good looking stadium, and it'll create a precinct. Brisbane's going to create more precincts that create more jobs, create more business opportunities, create more productivity, create more wealth inside of Queensland. And of course, it is the Olympic City, and there is some pretty compelling generational infrastructure being created. Obviously, the Cross River Rail is well underway. That was kind of pre-games, but you've got rail upgrades to the Gold Coast. You've got the Sunshine Coast Rail extension to Batinia. Now, I've done a lot of investment around Batinia off the back of this free riding effect. Again, I think it's just going to game change that area. Obviously, Brisbane Metro expansion and some upgrades to just about everything civil inside of Brisbane. So you get a free ride effect, and I've explained free riding a few times in this podcast, but free riding is really the principle that you really don't do anything other than own real estate, and you get a free ride off taxpayers paying for this infrastructure upgrade. And of course, Infrastructure Australia, which is basically Australian taxpayers, are paying a lot for the what next for Southeast Queensland. And again, if you own real estate right next door to a brand new train station, put two and two together, you're going to get an uplift of value. If you own real estate and it's positively affected off a new precinct being created, you're going to get an uplift of value. And so what we will see in real estate terms in Southeast Queensland is a lot of growth and expansion, from cruise ship terminal upgrades to local villages upgrading their look and feel and trying to capitalize off the games, to Brisbane Metro, to the Cross River Rail, Brisbane airport expansions, well and truly, set underway, done, but also, still being polished and handed over. And then you've got the RNA showground upgrades. You got so many upgrades going on. It's going to require people. It's going to require construction workers. It's going to put pressure on property values. It will put pressure on the price of new real estate inside of Brisbane, because construction workers will work on government jobs rather than build residential homes. Construction workers will work on Olympic jobs that the payday is handsome, rather than build a little apartment. So this is the challenge. This is the adverse effect of things like the Olympic Games, is resources are pulled away from basically the day-to-day to build this amazing city, which again, if you go back to Tokyo, Paris, London, Rio, Los Angeles, Sydney, brand names. Brisbane, not a brand name. So it's got a lot of work to do to put itself on the map of becoming a global city. But again, this challenge then links to the actual approvals that are out there. There's not a lot of stock in the Brisbane pipeline. It's constrained. And I think it will be constrained even further off the back of what is going on inside of Brisbane. And again, demand factors are really even being driven even further. So you think about the demand factors in Brisbane today. There is first homeowner grant stuff going on, so it's really easy to buy your first home. The government's throwing bucket load of money at that bottom end of the market, that first homeowner end of the market. And of course, investors shop in that end of the market, so it's a lot of pressure on the investor end of the market as well. But supply factors, you've got construction costs, you've got competition for construction through the Olympic Games, and then you've got all these kind of challenges with undersupply because things just simply aren't feasible. And then if we look at broadacre supply at those greenfield areas, we can see that there is basically a real challenge to even produce that stock into the marketplace. Only a small amount of both density and really broadacre stock is making its way to market at any one time in Brisbane. So there's certainly no oversupply of stock coming to market. And really, if you look at broadacre stock, really the places like Brisbane itself, Brisbane proper as a local government area, Redlands as a local government area, Moreton Bay as a local government area, they're not getting a lot of new parcels of big land that is going to come to market into the future. Effectively, there is no land in Redlands, Moreton Bay, and Brisbane itself. Other local council areas, Logan, Ipswich, really are going to account for over 50% of the projected broadacre land coming through the system to become future house and land packs. And again, the challenge with that as well is that it is effectively very, 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 very late. It's not coming. If we look at the next 10 years, half of the future supply of Brisbane is more than 5 years away. It's so far off. That's new housing. So half of it is at least 10 years away, and the other half is at least, circa 5 to 10 years away. And you've literally got, call it 10 to 20% coming through in the next couple of years. So I know that maths did it half and 20%, but effectively the supply is so far away that it will not impact growth figures immediately over the next 1, 2, 3, 4 years. You can pretty much look at growth forecasts and you can see really an upward trend for the next 4 years or so, which is pretty incredible. Again, could Brisbane end up become the most expensive city in Australia? Could it beat Sydney? Hey, maybe. Stranger things have happened. But wow, what an Olympic city! What a future! Do you keep investing in Brisbane? Well, if you haven't invested, I wouldn't. I would look at the marketplace. It's got some good fundamentals behind it, and I would be very precinct focused. Where can I make money? Remember the 4X growth plan. Deal growth, can you make some money through the deal? Location growth, what are the location factors going to improve in this precinct? Is it going to be a beneficiary precinct from the games? The market itself, if we look at that pie, population is going to grow, infrastructure is going to grow. You've seen it. Population and infrastructure are going to grow Southeast Queensland, and that's going to create jobs. The pie is really strong in Brisbane, which is a large percentage of capital growth generally on real estate. And of course, the 4X growth plan is complete when you add some behavioral elements, some reasons to why something is emotionally attractive to the marketplace. So, all right, folks, that's it from me. Talk again soon. Thanks for tuning in to the Urban Property Investor. If you enjoyed the episode, make sure to subscribe on your favorite podcast platform or YouTube so you never miss an episode. I'd love for you to rate the show and share it with your family and friends. Let's spread the word about property investing. Stay connected between episodes on Facebook, Instagram, and LinkedIn. And check out the rest of our podcast network at positivementor.com.au. And if you're serious about growing your property portfolio, don't miss our complimentary Property Investor Nights. Register now via the link in the show notes. See you next time.